Welcome back to the Deep Dive. Today, we are strapping in really for a high-velocity look at a network engineered, right from the ground up, to solve one of the biggest headaches in early crypto: speed and scale.
Yeah, we're talking Solana.
Exactly. We're diving into Solana, definitely one of the most talked about layer one blockchains in the whole Web3 space today.
Yeah.
We've pulled together a really fantastic stack of sources. They cover pretty much everything from its unique engineering, which honestly sometimes sounds a bit like science fiction,
It kind of does, yeah.
to its, let's say, chaotic history, its more recent embrace by institutions, and, that ongoing flow of developers looking for cheap, fast execution.
Right.
So our mission today, it's pretty straightforward. Extract the core insights for you. We need to nail down exactly what problem Solana actually solves, how its, radically different tech works, why giants like Visa are even kicking the tires on it for settlement, and really crucially, what risks you absolutely need to be aware of to get that full, unbiased picture.
That's right. And when you boil Solana down, you're looking at a blockchain platform built explicitly for speed, unprecedented speed really, and massive scalability. And we have to start there, right? Identifying the core issue it was designed to solve.
The original pain point.
Exactly. That issue was, of course, the just pervasive frustration. You felt it if you were a user. You felt it if you were a developer trying to build dApps on the older established layer ones. Like Ethereum back then. These networks, they were robust, they were secure, no doubt, but they were just plagued by these painfully high gas fees and agonizingly slow transaction speeds.
Especially when traffic picked up.
Which was all the time in bull market.
Right, almost constantly gridlocked. Solana saw that and realized, okay, if blockchain tech is ever going to move beyond just niche finance stuff and actually hit global consumer scale, support social media, gaming, massive payment systems, it just had to operate at a totally different speed. Oh, I remember. It was the era of the $100 NFT mint. Easy. The $50 DX swap. Waiting 30 minutes for your transaction to maybe finalize. It was just completely unsustainable for anyone normal trying to use it.
Totally.
And Solana basically came out swinging, promising to just eliminate all that friction, offering a blockchain that could run at the speed of, traditional centralized systems, or maybe even faster.
Absolutely. And the immediate hook, right? The headline number that everyone knows that defines its whole place in the market is massive. Solana can handle over 65,000 transactions per second. 65,000.
Wow.
And keep costs near zero while doing it. That level of performance, that's what shapes the whole ecosystem. It dictates what kind of apps you can even think about building on it.
Okay, let's unpack this. Because 65,000 TPS, it's just a number, right? Until you really get what's going on under the hood. Speed isn't just faster computers. It has to come from some fundamental change in the architecture. So let's shift gears. Let's go into the engine room. How exactly did they pull off this kind of scale without, sacrificing security or finality?
Right. This is where we get into the really deep technical core. The answer lies in Solana's biggest technical innovation. It's the key differentiator, something called proof of history, POH.
POH.
Now, lots of people know proof of stake, POS, which secures the network. POH is different. It's like this unique cryptographic clock. It complements POS, but it's separate. And it fundamentally changes how transactions get ordered and validated.
Okay, I need you to break POH down a bit more for us. We've definitely heard the term thrown around, but what is it actually doing inside the network that speeds things up so much?
So POH is basically, think of it as a verifiable sequence of events. It's created using a high-frequency VDF, a verifiable delay function. Maybe think of it like this. In older blockchains, right? Validator A wants to tell validator B about a transaction. They both have to agree on the time that happened. And they have to talk back and forth and negotiate that order after the events happen. That whole process, the communication, the negotiation, agreeing on the timeline, that's the main bottleneck. That's what creates the lag. POH just cuts out all that communication overhead about time. Instead of needing validators to constantly chat to agree on time and order, Solana's leader, that's the current block producer, is constantly generating the sequence of outputs. Hashes, basically. That time has passed.
Okay.
And every transaction gets tagged with a hash that proves it happened at a specific point in this verifiable sequential stream.
So it's not really an agreement mechanism itself. It's more like a universal undeniable timestamp. If I'm getting this right, every node just trusts this clock. Because the sequence, the hashes, it's computationally hard to fake or generate out of order. Tampering is basically impossible.
Precisely. It's a mechanism for verifiable time. It prearranges the order before the transactions are even sent out for consensus. Think about a traffic cop trying to direct 100 cars all showing up at once versus like an automated highway toll system. You drive through, boom, timestamp ticket. POH is that automated synchronized toll system.
Right.
And because this timestamping and ordering happens before the transaction hits the wider network for the actual POS consensus, it just dramatically cuts down the time validators waste arguing about the state and the timeline.
And that reduction in like internal validator gossip time, that's the holy grail for scaling.
Right.
It frees up all their processing power for actually handling transactions.
Yeah.
Throughput, which gets us back to those huge numbers.
Yeah, and that comparison really matters because it shows the scale of the leap, engineering-wise. We said 65,000 plus TPS. When you look around the space, I mean, it just blows most competitors away. For context, Ethereum Layer 1, before all the upgrades, maybe 15, 30 TPS.
Yeah, something like that.
Even some advanced Layer 1s like Avalanche, maybe they hit a few thousand. Solana is playing in a totally different league, magnitude-wise. And that speed, combined with the cost advantage of the microfees, right, near zero costs, often like a tiny fraction of a penny, it means applications that were just impractical before or commercially unviable suddenly become possible, mainstream viable.
Right.
You just cannot build a functioning, decentralized global micropayment system or a really fast-paced on-chain game if every little action costs $5 or $50. But when it's 0.00001 per transaction, the whole economic model just flips.
Okay, and here's where it gets really interesting for us and for you listening. Because the quality of these insights we're bringing you, diving this deep into stuff like proof of history, it really relies entirely on the support we get from you, our listeners, and frankly, the continued ability to fund the research that powers these deep dives. So before we jump into whether Solana could genuinely be the backbone for the future Web3, we just want to pause for a quick but honestly really important request. If you find this kind of detailed, synthesized analysis valuable, like if these POH explanations are giving you that aha moment,
Hopefully.
then please make sure you hit that like button, subscribe to the channel if you haven't already, and this is crucial, tap that notification bell. It seems like a small thing, but your engagement, it seriously helps this channel grow. It boosts our visibility in the algorithms, and it lets us keep bringing you these deep dives. The quality crypto content you count on, whether we're talking POH or Ethereum's L2s or the latest in ZK tech.
Yeah, your support for the research lets us keep clarifying this stuff.
Exactly. It allows us to continue bringing clarity to this often really complex space. Okay, now let's take that raw technical speed and see where it's actually making waves. Let's look at the massive ecosystem growth on Solana.
Yeah, let's see where that speed and low costs are actually being put to work in the real world. This is where the story moves from, a technical white paper to actual tangible market adoption.
Exactly. We've got the architecture down. Now we shift from the blueprint to the actual projects, the real-world use cases that are fueling this ecosystem growth. It's one thing to build a fast engine, right? It's another to see if people actually want to drive the car.
Yeah.
And the first big area where Solana really made its mark, arguably, was digital assets. Specifically, that NFT explosion back in, 2021, 2022?
Oh, yeah.
Back when Ethereum gas fees made minting an NFT feel like this high-stakes gamble, often hundreds of dollars just for one transaction, Solana popped up as this cheap, fast, almost frictionless alternative.
Yeah, the sources definitely highlight that. It started with those early foundational collections, like Degenerate Apes, then OK Bears came along. These projects quickly showed Solana was a serious, viable competitor to Ethereum for digital art, for collectibles, and the data backed it up. You saw NFT volumes, marketplace activity on Solana just skyrocketed.
Right.
Developers suddenly realized, hey, we can launch these huge collections, thousands of items, without bankrupting our users on gas fees just to participate. It totally lowered the barrier to entry. Plus, the speed meant the marketplaces built on Solana felt. Well, they felt more like using a regular Web2 e-commerce site, not like the typically slow, clunky app experience people were used to.
No, that's a big deal.
Instant listings, sales confirming almost immediately, payouts right away. That's essential for high-volume trading. And Solana delivered that where other chains were really struggling.
And that same speed and low cost, it just created the perfect breeding ground for DeFi, decentralized finance. Especially for really active traders or users.
Yeah.
I mean, DeFi requires constant interaction, right? Especially if you're doing complex trades, managing LP positions, running bots.
Absolutely. And the source material points to the big platforms that jumped on this low latency setup. You had Serum early on, Radium, and more recently, Jupiter's become a huge aggregator. These platforms became staples because they could offer fast, cheap, decentralized trading, orders placed and filled with the kind of speed and reliability you'd expect from a CEX, a centralized exchange. Think about something like market making, that needs constant, tiny little transactions, adjusting prices, managing risk and liquidity pools. Solana's architecture made that actually profitable and practical for, even moderately sized users. Whereas, again, on a slow, expensive chain, only the massive institutional guys could afford to eat the cost of dozens of failed or high-fee transactions every minute.
What's really fascinating, though, is how quickly the utility grew beyond just crypto finance and digital art. The ecosystem just exploded outwards. You started seeing serious pushes into gaming, even physical hardware.
Yeah.
It signaled this real ambition to tackle everyday stuff.
Yeah, the gaming sector on Solana is particularly strong. And it makes sense, right? Games are fundamentally about constant state changes, microtransactions. Every time your character moves, picks up an item, levels up, does anything. Ideally, that needs to be recorded on chain somehow.
Right.
That means potentially hundreds of rapid, tiny transactions per user, per hour. You can only do that with microfees and near instant finality, which is exactly what Solana offers.
Yeah.
It turns what was just a technical capability into a core feature for game developers.
And then there was the hardware play, the Solana phone, the Saga, which was, ambitious, maybe a bit risky.
Yeah.
But it was a clear attempt to push blockchain utility right into mobile apps, moving the whole Web3 interaction layer off the browser extension and onto a dedicated secure device.
Right. The goal with Saga, really, was to tackle that huge adoption hurdle, key management. Managing your private keys is scary and confusing for most people. By building in a secure element, a native dApp store, they were trying to create this seamless, integrated wallet and dApp experience right on the phone.
Make it feel normal.
Exactly. Trying to onboard the next wave of users by getting rid of that painful setup process with seed phrases and browser extensions. It's really an infrastructure play, trying to make Web3 feel just like any other app on your phone.
And we absolutely cannot skip over the traditional finance integration. That lends serious institutional weight, right? It moves Solana beyond just being a favorite within the crypto world. We're talking huge players outside crypto adopting and experimenting with Solana's core strength, that settlement speed.
This is a critical point. It really anchors Solana's relevance. The sources specifically talk about how giants like PayPal and Visa have run pilot projects on Solana. And they're not using it to trade meme coins or NFTs.
No.
They're looking at the network for high-volume cross-border settlement.
Tell us a bit more about the Visa thing specifically. What does settlement actually mean in that context?
Well, think about how Visa moves massive amounts of regular currency, fiat currency, across borders between all their banking partners. That process is often slow, it's tied to traditional banking hours, it's cumbersome. They need a system that can handle instant global transfers at huge scale, reliably 247.
Okay.
So, Visa was piloting using Solana to move stablecoins, basically digital dollars, between their treasury partners. They were effectively using the blockchain as this fast programmable settlement layer instead of relying on old school bank wires. The fact that a company that size focused entirely on global payments is even testing Solana, it just underscores its potential institutional relevance. They see it as a viable fast settlement layer because of those 65,000 TPS numbers and the low cost. And PayPal's experiments were similar, revolving around testing its ability to handle extremely high transaction volumes for distributing stablecoins. It shows the traditional finance world believes Solana has matured enough to handle real financial weight, at least in these pilot phases.
Okay, so we've got this revolutionary, differentiated tech, check. Explosive ecosystem growth across NFTs, DeFi, gaming, check. And institutional validation from some of the biggest names in finance, check. It sounds almost too good to be true. But every technology, especially one taking such big leaks, usually has an Achilles heel. And Solana is definitely no exception. We need to bring in that counterbalance now.
Absolutely essential for a balanced view. And this is where we need to be pretty critical. If we're looking at the bigger picture, for all its speed, for all the institutional interests, Solana has faced really significant, well-documented challenges. These directly impact its reputation, its long-term viability. And the most critical issue, the one that's kind of dogged the network almost since day one, is its history of network outages, reliability concerns.
That is absolutely the elephant in the room, isn't it? Unlike Bitcoin or Ethereum, which have basically never just stopped working, Solana has had multiple, very high-profile incidents where the network just went down or slowed to an absolute crawl, usually because of heavy transaction spam or software bugs.
And these weren't just little hiccups. We're talking outages lasting hours, sometimes even days, where block production completely halted. For users, that means your funds are locked, transactions just hang there indefinitely, the whole ecosystem grinds to a halt.
Terrifying if you're mid-transaction.
Right. And the core problem often stems from its own high-throughput design. Because Solana processes so many transactions and requires such rapid processing from validators, when the network gets hit with excessive spam, like when those DAOs try to push through too many votes at once, the system can just get overwhelmed. It struggles to recover gracefully. And this brings up a really crucial question for you listening and definitely for those institutions testing it out. Are these repeated outages just growing pains? The price you pay for a bleeding edge tech that prioritizes speed above all else? Or are they a potential deal breaker for critical high value application like global payments?
Right.
When a major payment network goes dark for hours, the financial fallout, the reputational damage, it's severe. Solana has to demonstrate it can mature beyond these reliability issues to keep and grow that institutional adoption. The risk isn't just lost transactions, it's lost trust.
And tied very closely to the reliability issues are the criticisms around centralization. Solana's faced a lot of heat over its validator distribution, which seems like a direct consequence of the hardware needed to run the network.
Yeah, this is that inherent trade-off again. It comes from that scaling first philosophy.
Yeah.
To hit those phenomenal speeds, that 65,000 plus TPS, Solana demands really high-end, powerful hardware for its validator nodes. We're talking serious computing power, massive RAM requirements, and that naturally creates a much higher barrier to entry compared to, say, running an Ethereum node back in the day, which you could almost do on a laptop.
So why does needing expensive hardware matter for decentralization? I mean, can't anyone with enough money just buy the gear and run a node?
Well, technically, yes, anyone can. But the financial reality means the pool of who can realistically participate is much smaller. Critics argue that these intense hardware needs tend to concentrate power among fewer, often well-funded entities, maybe institutional players, big staking providers.
Right.
And if a large chunk of block production is controlled by just a few dozen entities, then the network is, at least theoretically, more vulnerable to censorship or coordinated downtime than a network where thousands of cheap nodes are spread all over the globe. It really forces you into that fundamental crypto debate. What do you prioritize? Maximum performance and scale? Or maximum distribution and censorship resistance, even if it means things are slower and more expensive? Solana clearly chose to prioritize scaling first. The bet is that as the network matures, as transaction fees maybe become more substantial, the rewards will eventually justify the high cost of running powerful nodes globally. And that will naturally lead to more decentralization over time. But right now, that centralization critique is definitely a valid concern.
And while Solana is grappling with solidifying its architecture and reliability, it's not doing it in a bubble, right?
Yeah.
It's facing this intense battle in the layer 1 space. The competition is fierce and everyone's constantly evolving.
Oh, absolutely. The main competitor, obviously, is still Ethereum, which is executing its own very different scaling roadmap. Ethereum's base layer is still relatively slow, sure, but the entire ecosystem is now shifting onto layer 2 solutions: Arbitrum, Optimism, Polygon ZK EVM, Starknet.
Right. The L2s are exploding.
Exactly. And these L2s effectively borrow Ethereum's established security and its deep decentralization while offering much faster and cheaper transactions themselves.
That rise of really high-performing layer 2s is fascinating because it directly challenges Solana's core value proposition.
Yeah.
Low cost, high speed, but without making developers leave the comfort and network effects of Ethereum.
Precisely. Which means Solana has to maintain a really significant cost and speed advantage to keep developers from just migrating back to the Ethereum ecosystem via an L2. We can look at gas fees here. Solana's microfees can't just be marginally lower. They probably need to be orders of magnitude lower than the combined cost of using Ethereum plus an L2. Otherwise, why take the risk on a separate chain?
Yeah, the incentive shrinks.
Solana has to constantly prove its worth as the absolute cheapest and fastest primary layer for those applications that demand the ultimate throughput. Think certain types of gaming, high-frequency DeFi. And we also have to remember the other big layer ones mentioned in the sources. Avalanche, for instance. Cardano. Avalanche often targets high throughput for specific use cases using its subnets, which kind of mirrors Solana's design goals in some ways. So yeah, Solana is in this constant arms race against other powerful, well-funded alternatives, all chasing the same developers and institutional dollars.
Okay, so we've dissected the tech leap, we've charted the explosive ecosystem growth, and we've confronted the really serious risks around reliability and centralization. What does this all boil down to for you, listening? As someone interested in Web3's future, maybe as a potential participant or investor, let's try and synthesize this into some practical takeaways.
Yeah, for investors, Solana basically offers a direct exposure to one of the absolute fastest growing ecosystems in crypto. It's built on that promise of mass adoption through better engineering. The core investment thesis is pretty simple. If the future of Web3 needs truly massive scale to onboard billions and support real-time dApps, then Solana is arguably the best positioned layer 1 to deliver that scale today.
We should look beyond just the SOL token price, right? Metrics like total value locked, TVL. On Solana, the amount of capital users have committed to its DeFi platforms that's seen huge, sometimes really dramatic growth over time.
That TVL metric is key. It shows financial momentum, it shows confidence from developers and users. People aren't just speculating on the token price, they're actively building on it, locking up capital long-term within the ecosystem. However, the investment side is also inherently tied to volatility. We see that clearly in the historical price charts. When you look at SOL's price history, you see those classic crypto boom and bust cycles. Massive highs, driven by hype and explosive growth, followed by really deep crashes, often made worse by those network outages or just broader market downturns.
Yeah, it's been a roller coaster.
That context is essential for anyone thinking about its current position. It's a high beta bet on scaling, meaning it's likely to swing much harder, both up and down, than maybe more conservative crypto assets.
Okay, beyond just investing, let's refocus on the broader Web3 push. The impact Solana is having on the whole industry. Because the long-term potential here isn't just about making money, right? It's about pushing the limits of what's technically possible with decentralized systems.
Absolutely. The sheer speed of Solana makes real-world use cases possible that were just, frankly, science fiction in crypto a few years ago. We're talking instant micropayments that could genuinely disrupt traditional banking cross-border transactions settling in seconds, not days. We're talking complex on-chain games where potentially millions of players interact smoothly without lag, dynamic NFT marketplaces that feel as slick and responsive as any Web2 platform. Solana is basically proving that high throughput isn't just nice to have, it's essential for certain applications.
Which brings us back to that core philosophy of Solana. It really represents a significant shift in blockchain design thinking, moving away from that decentralized first, figure out scaling later approach. It made that tough call. Prioritize scaling first using POH, betting that decentralization could catch up over time as the ecosystem matured and validator rewards grew.
That's the fundamental tension defining its path forward. If we connect it to the bigger picture, Solana is forcing a paradigm shift. It's proving that ultra-high throughput is achievable in a permissionless setting, and that forces every other layer 1, every layer 2 to innovate faster, harder, to compete on speed and cost. That competition ultimately benefits all of us, the end users, by driving down costs and improving the experience across the entire Web3 landscape, regardless of which chain wins in the end.
Wow. This has been a genuine deep dive. We've covered the mechanics of that cryptographic clock, proof of history, the mind-boggling 65,000 TPS, the explosion of NFTs and DeFi, that serious institutional interest from Visa and PayPal using it for settlement, and also, critically, those persistent challenges around network reliability and the centralization trade-off baked into its design.
Yeah, Solana's story is definitely still being written. It's one characterized by radical innovation, but it's balanced precariously against documented operational risk. It's honestly one of the most exciting and sometimes one of the most frustrating platforms to watch and be involved with in the entire crypto space. It might be the fastest horse in the race right now, but it still has to prove it can consistently stay on the track.
So we'll leave you with a couple of provocative questions to chew on. First, what really stands out to you from all this? Do you think Solana's raw technological edge and speed will eventually let it overcome those past reliability hiccups and actually challenge, maybe even flip, Ethereum as the dominant smart contract platform? Or will that history of outages always kind of keep it pegged as the high-risk, high-reward alternative?
And then, thinking more about the market dynamics. Given the intense competition, but also the potential for, massive price appreciation, if SOL were ever to reach valuations similar to, say, BNB hitting $1,000 in the last cycle, what would you do? Would you sell immediately, take profits from this high-risk play, or would you hold on, betting on its long-term potential to become the fundamental plumbing for a truly scalable Web3?
Excellent thought experiment to end on. Thank you so much for joining us on this deep dive into the complex world of Solana. We really hope you feel thoroughly informed and ready to keep exploring these ideas.
Keep learning, keep questioning everything, and we'll catch you on the next deep dive.